NDTV Profit in association with NSC.
Welcome back. You're with us here on Opening Fire. You've got the market, which is looking up. By the way, the Nifty did dip into the red for a brief while. From there, it's actually picked up 33 points higher. 78.83 is where the Nifty spot is now trading at. I've got the management at PTC India Financial Services joining us. Mr. Ashok Haldia is Managing Director and CEO at the company. Now, the stock's been doing well. It's up about 20% over the last 3 months. A large portion of that 20% has come very recently, I guess, in the run-up to the fourth quarter results. Mr. Haldia, Prashant this side, sir. Good morning. Thanks for joining us. Can you talk to us a little bit about the fourth quarter?
Very good morning.
I know you obviously can't be specific, but qualitatively, how has it been? How has lending been? How much has it picked up, etc.?
No, it would be difficult for me to talk about fourth quarter. But as far as the third quarter, the December 2015, we have seen our loan book growing by 30%. Our profit before tax and profit after tax growing between 20 to 30%. So the performance compared to the on year-on-year basis was pretty good.
Right. No, I mean, Jan to March, was it a lot better than October to December, sir? Just qualitatively, no numbers, obviously.
No, as I said, it would not be possible for me to speak. But then if you look at from a general perspective, there has been growth in the investment into the renewables, both solar as well as wind. And the capacity that has been added or going to be added this year is around 6,000 megawatt, and the next year is going to be 10,000 megawatt in the solar itself. And also for the wind, the next year the Watts plan is to add 6,000 megawatt, and so for the next 2 years. So in the next 3 years, a total about 50,000 megawatt would be added in the wind and the solar. That would mean quite a significant jump in the investment to be made, and so the potential that's available for the financial institution to lend, and particularly for the institutions which have a domain expertise and which has been in the field for last 5-6 years.
Fair enough. Could you give me the full number for financial year 16? What was the loan sanctioned? And just compare it to 15, what is the growth? Talk to us a little bit about how you see 17 panning out in terms of sanctions, sir.
Loan sanction was 6,500 crore. Yes, the loan sanctions during the till middle of the March was 6,500 crores compared to 4,100 crores in the entire previous year. So there has been about 50 to 52% jump in the sanctions that we have made during this period.
And 17, sir? I mean, it's a huge increase, 16 over 15.
No, that's as I said, that's difficult to say. I can only talk about the general environment and enthusiasm or the investment into the renewable sector, and that should pose a great opportunity for the financial institution like us.
Do you see the overall cost structure for you going down? I mean, 40% of your funds come from banks.
We had in December 15 quarter the spread of 4% and the NIM of around 6%. And with the RBI policy numbers this month, and if the transmission takes place, the cost of lending would come down, and to that extent, I would believe our cost of borrowing would also come down. So if the bank transmits, our cost of borrowing would come down because we are mostly borrowing at the base rates. So if the base rates comes down, our cost of borrowing would come down. But then the expectations of the developers, particularly in the renewables, would also be that the lending rates also reduces. So our effort would be to maintain the spread and the margins to the extent possible. And if required to maintain high quality growth, we would not shy away from leveraging the spread and the margin.
Right. No, so when you say high quality growth, you're saying maintaining net interest margins at 5-6%. So you'd want to do that.
No, what happens in the because of the because of the competitive factors in the market, the high quality lenders would go to the institutions which offer them the relatively lower interest rates. So what I'm trying to say that if that needs, we may leverage our spread and margins.
Right. So can you, is it going to be possible to maintain margins at 5-6%? Can you continue to do it sustainably?
We have been able to maintain since beginning. That's what has been our track record. But the power sector and the renewable financing has been evolving and has matured a great deal. So we'll have to watch on quarter-to-quarter basis. But our effort has been, as the lending rates comes down, our effort have been to reduce the cost of borrowing as well, so that so that we are able to maintain the spread and the margins, and that we have been doing by reshuffling or broadening our source of funding as well as the instruments of funding for us. And equally at the same time is also the portfolio mix that we lend. So we have both portfolios where, without compromising on the risk, where we can get a higher interest rate if we have to charge lower interest rate for a part of the portfolio.
Right. Could you, not the portfolio, actually both things. One, the funding mix and the portfolio mix right now. Could you detail both those out for us, sir?
Sorry?
The funding mix, if you can. I think 40% is from banks. But if you could tell us about the rest, and also the loan mix right now, the portfolio mix.
No, our resource mix comprise of the line of credits from the banks, the ECBs, and also our own capital to that extent, and the short-term borrowings.
Right. No, I mean,
which would include the CPs, and also we have been borrowing in the form of the bonds from the market.
Okay. And the lending mix, sir, and the existing stock of loans, if you were to divide it up to sectors?
Lending mix, yes. This year we have sanctions more than 70% to the renewable. We have also diversified into related infrastructure because for being risk prudent as well as in order to have a larger spread. We have also diversified into areas like annuity roads, infrastructure, logistic, ports, transmission sector.
Yeah. Okay. Okay, 70% went to, you said, renewables, right? In financial year 16.
Renewables. Yes.
Okay.
Yes.
Fair enough. In 17 also, you'd say the mix will remain the same between renewables, non-renewables? Because the government thrust is also on renewables.
No, I mean, that would, our approach is not to go on the basis of the fixed numbers. We look for the good opportunities, both in terms of the project and the promoters. But seeing the market as it is, and also the way we would like to be risk prudent, we would not like to concentrate onto one particular sector.
So within renewables, where is most of the money going? I mean, solar, wind, etc.
The promising opportunity into related infrastructure.
I'm saying within renewables, which area is most of the funding going into, or has gone into in 16?
Solar as well as wind.
Okay, solar as well as wind. Incrementally, is more money going into solar, sir?
Yes.
It is. Okay, fair. Fair enough. And what is the size of lending to, you said allied infrastructure, roads, hybrid annuity, etc. What is the portion now for you?
I would say since we have decided to move into, I will not know the exact number, but should be around 10%.
10%. Okay, fair enough. Mr. Haldia, it's a pleasure, sir. Thank you very much. Good luck. Appreciate you joining in and hope to speak with you once the fourth quarter results come out, and that should be soon enough as well. Ashok Haldia, Managing Director and CEO, PTC India Financial Services, with that perspective. We're going to take a quick break here. We'll come back in 2 minutes. We have that story as far as loans to Punjab state government at the risk of becoming NPS, possibly. RBI asking banks to provide against those loans. That on the top when we return. We're back in 2. A few other stories follow as well.